The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. This is Jacob Shoup filling in for Tommy O'Brien. Well, we have the CPI out. We'll go through that a little bit. First thing, let's just look at where we're at pre-open. We have the E-mini up about 0.48%. That was Russell futures 1.15%. The NQ's up about 0.46. Dow futures 0.38. We're still under the 40,000. Dow futures. The gold contract up slightly at 23.80. Silver 29.42. We are marching on that way to a 32 price target. Copper, wow, 4.92. Love it. Take a look at some of these producers in copper. We have Freeport McMoran up about 1.35 right now. Is up about 3% yesterday, trading at 54.20. Take a look at for some of those miners. In the longer term, crude oil continues to drop. We're at 77.75 right now. I believe OPEC is going to vote on a output decision. I think that's June 1st. So this is interesting because they've gone through a period, and this is mainly led by Saudi Arabia. But they've gone through, OPEC Plus, though, includes Russia and Mexico. However, they've gone through this kind of structure of, okay, hey, listen, we're going to decrease output in order to balance markets. This has been probably a year-long thing. And really, what that was designed to do is, I'm sure, probably somewhere add some political pressure. But then second, just to essentially increase their income. Increase their margins. That's also a big thing as well. Well, they said the group must increase production at June 1st to balance the market. This is what analysts are saying, but that's probably not going to happen. We can actually read through those OPEC reports. If you've never done that before, they're interesting. They're super thick, so we can't go through the whole thing. But we can read the synopsis they had at the beginning, and it's actually really interesting. So when that comes out, we will read that on here, and it'll be pretty cool. So ministers from OPEC Plus group of oil producers must agree to raise output when they meet June 1st if they really want to balance the market. This is what analysts are saying. Again, that's probably not going to happen. OPEC published its monthly forecast Tuesday with the IEA following earlier today. These are the last outlooks ministers will get before they gather to discuss production policy for the rest of the year. When comparing the two sets of estimates for oil demand, let me see. OPEC has consistently forecast demand growth of 2.25 million barrels a day in 2024, a figure that's remained unchanged since the start of the year. The IEA and the U.S. Energy Information Administration, which updated its figures earlier this month, see consumption increasing at less than half that rate, and both trimmed their expectations for a second straight month. Oh. So despite the weaker consumption outlook, the IEA's current supply-demand balances put the amount that OPEC and allies need to pump at about 42 million barrels a day in the second half. That's about 700,000 barrels a day more than they produced last month. In this, I would argue, so I mean, in some way, America producing more oil is going to compensate for that, but not by enough, right? So you're going to somehow at some point see an increase in this price here. I'm trying to kind of wrap my head around why we're seeing such a massive decrease, but what's interesting about the commodity markets is they can usually get priced pretty accurately. But what I'll say to this is there's quite clearly also political angles in OPEC as well, right? It's not, I mean, it is about making money, obviously. However, it's also about trying to, establish these kind of policies around the world. And you can see Saudi Arabia use that. You can see Russia use it to an extent as well. And then Mexico more or less use it too. Obviously, they're decreasing their exports of oil. And this is what I would argue. I have some, friends as well that we kind of argue about this. I'm for, going on nuclear, getting away from oil and stuff like that. And it's not necessarily because of like climate or anything like that, but it really is about being independent. So you have this, big global patchwork, right, of different cultures trying to work together and achieve something. Obviously, there's a dominant hegemony in the world, but not everyone always agrees with that. And it's this argument, too, that these concepts of globalism, at least in this market capacity, kind of prevent conflict, right? Like an end of history concept, right? We're all unified under this thing, but we can see with events like Russia and Ukraine that that's not really true. And so we then become, victim to whatever these other countries decide they want to do. So Saudi Arabia decreasing output, Nigeria having massive issues even getting their oil out of the ground. You have Russia's, getting one embargoed, but then two, having the refineries bombed. And this causes issues around the world, especially at a time when we're dealing with inflation. So this is why I argue, getting off this kind of traditional energy standard. Anyways, we're looking at Tesla. We're up at actually about 180, at 180, up 186. The Dow futures, we actually did, the dollars, we did break below that 105 level, so we're at 104.52, and Bitcoin's up today, actually. Let me see what we're trading at in Bitcoin. At 63,000. Nice. Quite a rally up, too. And then Plug, continuing that run of about 7.5%. They obviously got a ton of money. We went over that yesterday for their green hydrogen in the billions. So quite good. Let us take a look quickly at CPI. So a little bit lower than anticipated, which is good. But I don't think we're out of the woods yet. I don't think the Fed thinks we're out of the woods yet. I don't see the market necessarily reacting in a huge way to this news. I mean, we are pre-market, so we're going to wait to see if we can really get some action at 9:30. Of course, we'll be following that. But let's take a look. So all items obviously only increased 0.3% in April. That is down from 0.4%. This is pretty good. Food remained unchanged. I'm trying to look at, what affected this, right? So food at home decreased, which is nice. Food away from home increased at the same rate it did in March. Same with energy increasing the same it did in March. Energy commodities did go up. It obviously decreased from March. March decreased from February. Then we had a slight increase in April, but that is still lower than what we saw in February as well. Gasoline up a bit. Let me see what else. Fuel oil up a bit. Fuel oil down a bit. Utility piped gas services down. So, look, this is pretty interesting. I want to see shelter, though, is the big one for me. So, unchanged. On an unadjusted 12-month, still up 5.5%. So, inflation's still here. It's maybe not as bad as people anticipated for April. But again, we need to look at a full scale kind of thing. Folks, stay tuned. We will be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shoup filling in for Tommy O'Brien. We were just talking about CPI before the break. However, we do have a caller, which is Jose from Lakeland. He has a question about interest rates. Jose, how are you doing?
Yeah, top of the morning. Hey, I've got a real estate question, but I want to preface it by an observation about the Federal Reserve.
Yeah.
So a few months ago, we went from 5 possible cuts this year to just maybe 1, then maybe a hike, and now we're back to possibly today's number 2 interest rate cuts this year. I'm convinced that the word perception is valid here because the Fed doesn't even have to cut interest rates.
Right.
All they have to do is put the word out there that they may. And that buoys the market for months and months, and in this case, benefits Biden. So just the perception they're going to. They never even have to do anything, just the perception.
Absolutely. And that's what I was saying, too, about the last time they met. It was actually kind of a dovish statement, but if you were looking at, a lot of the supporting numbers, they didn't really seem unchanged from the hawkish comment that was made a month prior. I definitely agree with you that it's a lot about perception as well. So, anyways.
Yeah, I think so. They can just sit on their hands and just ride the bus all the way to the finish line. They just, just put it out there. There may be some cuts. Hey, my real estate question is, explain to me, in your opinion, of the home buyer today. They won't touch a rate of 7% or higher, but they're going to wait till 2025 when rates start getting cut with impunity, heading down to 5.5%, 6%. They won't touch today's rate, but next year when they get to 5.5%, 6%, isn't that going to cause home prices to skyrocket, which means they're going to be paying more for the house anyway? Isn't it just a wash?
Yeah, so I mean that obviously is a huge risk, and you can obviously balance it out, right? So even if you have lower rates, if the value of the market goes up, you're going to be paying something similar. I think a lot of it has to do with just securing loans and having to pay that for so long out, right? I mean, you're seeing right now people buy these, variable rates on mortgages at these levels, right? Because they're hoping sometime in the future they can work them down. The way that I see it is I think people are just concerned on the long term about refinancing a home, even in theory, if prices are a little bit lower right now. They're still locking in for some period of time at a high mortgage rate. I would say that's probably the psychology. However, I'm not in the home buying market at all. I'm not looking for a home right now. So my kind of opinion on that of what would happen is pretty limited, mainly because I'm not thinking about it personally, right? But I think that these high rates just turn people off. They're worried about what it could do long term. If rates end up coming down, they're in kind of a perception-wise in a losing position. Even if the prices of the homes go up, there's probably, I would say, a psychology in people's mind that they can get into that home market before the prices skyrocket to a point that they would with the decrease of rates. That's kind of the way I would think about it. So. Yeah,
I think that's probably accurate. Okay.
Are you doing that out in Lakeland? Are you in the real estate business?
Well, I mean, I have some small spec homes built around that I'm putting on a couple homes today on the MLS. I'm wondering, is it a waste of time? Is it the wrong time? And I just use a local builder, real inexpensive, single-family home. I just don't know. I'm going to throw them on the MLS and see if I get a bite on the on any offers here. I'd love to get some investor to take it and avoid all this nonsense where you just get the cash and you don't have to do an appraisal and all that good stuff. But
you have a lot of people moving to Lakeland. Obviously,
a very strange atmosphere for homes right now.
It definitely is. And again, having an environment where we're not actually sure if rates are going to lower down, the mortgage rates get stuck in a really weird kind of limbo, right? Where nobody's really buying. You still have some people buying, but not as many. And but the point is rates are not coming down either, right? So you're going to kind of get stuck in this. I wonder, it probably won't happen because homes are so staple, but some kind of period of just kind of illiquidity in that market. Actually, what I could say too is I think Tom's on today. If you wanted to call him, he's really big into real estate, especially in the area. And so a lot of what I learn about that is from working with him on it, or just kind of picking his brain. I'm curious, though, in Pinellas County, we've gotten so many people since 2021. Are you seeing that in Lakeland as well? Like, I know Ocala is also seeing a massive influx of people, which I would not, really expect because there's not much going on out in Ocala.
I think the Tom Jr. is out in Lakeland, and he made the point a few months ago that everybody's moved there. Polk County, where Lakeland is the fastest growing in the country or something.
No kidding.
And, it's terrible. I got down here 25 years like Tom Sr., and you could drive from the north side and south side, not see just a handful of cars. You can't even move there now. I got to ask. Yeah. I got to ask Tom, the Tom Sr., the big dog. Of course he's there. He's Tiger Construction, for Pete's sakes. He's the guy to ask, but I can't get him in the big chair.
He's going to be on today at 3 o'clock. Promise you that. He's going to be on today at 3 o'clock. So Jose, give him a call. I'm going to be listening just because I'm curious to hear what he has to say as well. So he's literally messaging me right now in the den. He said, I'll be here today. So give us a call back, Jose, all right?
All right. Thank you.
Jose, thank you for calling in, man. We'll hear from you soon, okay?
Okay, bye-bye.
All right, take care now. Bye. Yeah, seriously, folks, tune in for that. And that's what I'm trying to say. Everything, another great thing about, I'm learning about, trading and finance and kind of how markets work and everything, but also there's other things, too. I have learned so much about real estate, and I did not anticipate that. I'll be serious. All right, let's look real quick. We'll wrap this up. The CPI. The food index was unchanged in April after increasing about 0.1% in March. The index for food at home decreased 0.2% in April. 3 of the 6 major grocery store food group indices decreased over the month, while the remaining 3 had price advances. The index for meats, poultry, fish, and eggs decreased 0.7% in April, led by a 7.3% decline in index for eggs. That just seemed like a really volatile kind of good. I think even like maybe a year ago, if we all remember it skyrocketing for a short time. The fruits and vegetable index declined 0.8% over the month, and the non-alcoholic beverages fell 0.2%. Cereals and bakery products increased 0.6%. Let me see here. Shelter index increased 5.5 over last year, accounting for 2/3 of the total 12-month increase. Keep that in mind, folks. Stay tuned. We will be right back.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month. So trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tommy O'Brien. Well, we got Boeing over on the chart here, down slightly. Actually, we're up at the open right now. E-mini up about 0.45%, Russell futures up about 1.10%, NQ's up 0.46%, Dow futures 0.43%. That gold contract is continuing to move up, but just a tad. We're at 23.71. Silver moving all the way up to that $30 area. We'll see if we can hit it. Copper coming off $4.95. We're at $4.89 right now. And then crude oil continuing to be stable around that 77, 78 area. Quite the move down here yesterday. We're going to actually have Teddy Keckstadt on next break. We're going to ask him what he thinks about oil. Now, Boeing in some deep water yet again. Talk about dropping the ball here. You know, I mean, this is a company that gets plenty of government contracts. I mean, everyone flies Boeing. And they somehow managed to get themselves into this situation. You had a big crash in Africa on a Boeing jet. I mean, it's like this is all happening at once. It makes you think, like, what is going on here? Well, Boeing delivers the fewest jets since the pandemic on 737 MAX slowdown. So Boeing delivered 24 commercial jets in April, its lowest monthly tally since February 2022, as the plane maker slowed production of its workhorse 737 and 787 Dreamliner widebody to focus on improving quality. I'd say that's probably a smart move. The U.S. plane maker handed over 16 737 MAX narrowbody jets, along with 4 Dreamliners, 767s, 777s, which actually had a friend whose father flew those for FedEx, and it was crazy. He would show me pictures, and I just couldn't believe it. Anyways, Boeing said on its website, the company also logged 7 gross orders and 33 cancellations in April. Obviously, you have things going on, not just in usual court systems. We're talking about Congress, people coming out and saying that there was such a clear and vagrant violation of certain safety protocols and testing protocols. And, you know, we've been talking about that with a lot of things in manufacturing, even with liquefying natural gas tanks. You know, I have people who work at that, friends, and they're like, this quality testing is going down. And I wonder if that is actually something that's kind of latent now in the manufacturing market. We'll have to see. You see Boeing now, you're seeing this stuff with LNG tanks. So not only is this rough for them, but the Justice Department, this was yesterday, the Justice Department says that Boeing breached a 2021 agreement that shielded it from criminal charges over the MAX crashes. So the government came to them and said, we're not going to pursue criminal charges as long as you do X, Y, and Z. And Boeing failed to do that. So now prosecutors have, I think, until June to decide how they want to proceed. And this is criminally. So Boeing violated a 2021 settlement that protected it from criminal charges tied to the fatal 737 MAX crashes, opening the company up to potential U.S. prosecution. I believe that probably will happen. Federal prosecutors said in a court filing in Texas that they are still determining how it will proceed in this matter and that Boeing will have 30 days to respond. The airplane manufacturer broke the agreement by, quote, failing to design, implement, and enforce a compliance and ethics program to prevent and detect violations at U.S. fraud laws throughout its operations. Boeing says Boeing denies those claims, but whatever. We believe that we have honored the terms of that agreement and look forward to the opportunity to respond to the department on this issue. I'm looking forward to that too, because I mean, that's like prime time, right? That's prime time cable. There's no doubt that this is going to be studied going forward. And I don't think the issues are behind Boeing either, because every week, new stories come out of how, of some other kind of thing falling off the plane, them getting grounded, a new whistleblower comes out, something happens to that whistleblower. Obviously, I think that's just kind of probably chance, but still, this is a really bad situation for Boeing. That CEO's moving out, which needs to happen without a doubt, for them to kind of get a facelift for the company. In 2021, Boeing agreed to pay $2.5 billion to settle a conspiracy charge with the Justice Department. After a roughly 2-year probe, the DOJ accused the company of concealing information about its MAX plane that had been involved in 2 crashes that claimed the lives of all 346 people on board. And think about this, too. I mean, this is a company that is so ingrained with the industry of America. The Boeing CEOs would meet with presidents. They do things for the military. And so for the DOJ to come out and, 1, hit them with the conspiracy charge, and then 2, go to this point as well as saying we might pursue this criminally now, it could probably give you a little bit of insight of really how bad this is. Boeing had admitted that 2 of its 737 MAX technical pilots, quote, deceived the Federal Aviation Administration about the capabilities of a flight control system on the planes that was later implicated in the 2 crashes. I would love to hear more about that and why the technical pilots would do something like that. So this is a positive first step in explaining to the families. Yeah. Anyways, 178 right now. That kind of news didn't really crush it, and I really think it's just because Boeing is a behemoth, and again, is so ingrained with just U.S. industry. Anyways, not a good look for Boeing whatsoever. Let's take a little look at Walgreens here. Some interesting news for them. Give me 1 second. All right. Let's take a look here. We have the Walgreens stock up. So they are offering its own cheaper version of opiate overdose reversals, which is naloxone. Obviously very important nowadays, as well as we have, it's Narcan, essentially. So we have it here that Walgreens on Wednesday said it will offer its own cheaper version of Narcan. The drugstore retailer aims to boost the availability of the life-saving medication in the U.S. as the nation grapples with the toll of the opioid epidemic. This affects more than 645,000 people over a long period of time. The company said it will sell the 2-dose pack of Walgreens brand naloxone for $34.99. That is around $10 cheaper than the over-the-counter branded drug Narcan, which became the first prescription-free version of naloxone to win Food and Drug Administration approval last year. Previously, patients needed a prescription to access Narcan. It's concerned the decision to really do everything we can to increase accessibility, not just in terms of quantity and availability, but also price. I think this is going to be huge for Walgreens as well. Obviously, won't move the stock too much, but just overall, I think that's really positive. And I think as we start getting way more mobilization, which I don't think we've seen too much of it, honestly. But we get more mobilization against this kind of opioid crisis we have. Providers that offer cheaper versions of Narcan are going to be poised to really have some good cash flows. And so I wonder, over time, will the quarterlies and the financials kind of report that? Some other news, Red Lobster is closing dozens of stores. You live by those free cheddar biscuits and you die by them. They kind of screwed up the promo. And people were coming in and just eating through all these free shrimps and biscuits, and they couldn't afford it. That's crazy. Folks, stay tuned. We'll be right back with Teddy Keckstad.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I don't know. Welcome back, folks. Take a look over here. We're at TFNN.com. Of course, we have our front page and the featured content, but come over here to the newsletters tab. And if it loads for you quickly, we have something right down at the bottom here. This is the Tiger Forex Report by Teddy Kekstat. Now, this is released every Monday morning. It is great. If you're trying to get into Forex, if you're trying to get into, let's just even say, currency pairings, whatever it is, this is the one for you. He goes over certain commodities as well. And now I want to say, too, if you run over to that services tab, we have 2 options for you. This is Capitalize on Time with Calendar Stock Option Spreads by Teddy Kekstat. Very informative. And if you're just getting into trading, or you're just not really sure what the heck a Japanese candlestick pattern is, which, you know, so many traders use and is honestly pretty fundamental in trading, this is the webinar for you. It's 79 or 97 bucks, guys. Like, this is a great deal for you. Teddy comes on every Thursday to the morning market kickoff, and we love hearing from him. Teddy, how are you doing today?
I'm doing well. We got a sunny day in Chicagoland.
There you go. I think we got some of your weather because it's a little bit cloudy and windy, so not so bad here. So, well, Teddy, okay, so we have CPI come out. Obviously, some to talk about that. It was not as bad as I guess people were anticipating, but we're still well below 2% level on a yearly, so that's something to look at. Oil is kind of coming back down. Crude oil, we're about 76.95 right now, and then you have OPEC voting on what they're going to do in June. I'm curious to hear kind of what your insights on this are.
Okay, well, CPI came out as expected. I think it's kind of a ridiculous number. I personally think it's higher because everything I see is continuing at the stores and what have you is going up, not down.
Sure.
Maybe eggs are a little bit cheaper than they were a few months ago, but okay, so great, it's 50 cents less a dozen, big deal, But as far as crude and OPEC, what kind of decision are they going to make? I think that in lieu of what's going on in the world right now, they're probably going to be very stable and favorable towards the market. I don't think they're going to be restrictive. I would be very surprised if they become very restrictive. If they do, we'll deal with it when that happens. Obviously, if that should occur, that would be a super bullish fundamental for the crude oil market. Right now, I would say, it's trading some very nice support. I mean, it didn't make a lower low yet today. I mean, we had the low, what was it, last week? We're hovering above that right now, but we're grinding. I mean, we're hanging in there in a downside support zone where we've been basically going sideways. So I don't think there's too much room to the downside. I mean, I hope oil breaks $20, to be quite honest with you, but in trading, there's no wishing, hoping, or praying. So if I'm saying I'm hoping, I know it's not going to happen, So I'm still in a buy break situation. I would say to the downside, we could probably still get down into that $75 area. I think 75.5 is pretty much going to be the floor. 75 may be the extreme. I don't see it getting below that. The only way I could see that would be happening is if you had some kind of fundamental of supply increasing, which I don't see that happening, especially because now we're heading into the summertime, rollover of how they refine the gas and oil in the country to begin with here and abroad. So, and then we also have the June roll. Oil is one of the commodity contracts that has an expiration every single month. So, and I would be very careful with the way the spreads between the May and June contracts go in towards expiration, especially between the options and futures, because when we come into that area of the end of the quarter, as well as financial and commodity expirations, the spreads typically tend to move a lot, which means now for people who don't understand spreads and commodity contracts and expirations, I'm not going to make it really difficult for you. But as far as the pricing mechanism is concerned, that should keep it pretty stable right now. There's no reason for any long-term heavy bullishness, if you will. So unless you see those spreads start to all of a sudden expand over the next week or so, or especially going into the beginning of June, in that case, then I would say that we're probably going to see a bottoming for sure in crude, and then I would expect a big rally. Until then, I think you're going to chop around where you're at. If we touch down to 75, I don't see us hanging there for very long. I see us more about pretty much where we're at now, around $77 to $80, hanging in that range at least for the next week or so still. So it's going to be a tough trade. I would wait for a signal that if you want to buy this market, wait for a solid buy signal. And as far as selling it, I'd be very, very cautious right now as far as being a seller. I'd be very nimble, and I wouldn't want to keep your expectations very tight.
Yeah, absolutely. And, this is something I'm trying to look to get into as well, right? I'll use some kind of like leveraged ETF for it, but I'm seeing it out here. Obviously, the fundamentals are at work as well. Again, we've spoken about Mexico, decreasing their exports of it, although that's not such a major portion. But then also summertime. So it's actually kind of surprising to me that maybe we're this low, but still learning a lot about crude oil as well.
And that's why I think it's going to spike if it continues to go lower. I would not get married to a short down there. I'd be careful selling it in the hole, and getting caught.
Big time. Well, the other question I have for you as well, obviously we've spoken about yen, I think, the past 2 times, but Bank of America came out and said, this is what they said, it would take global risk for U.S. to step in to buoy yen. So they said the sell-off in Japanese currency this year sent the yen to breach $160. And Bank of America said this is actually like super undervalued by any reasonable measure. So I'm curious to hear kind of what you think their point in doing this is, and then what the win side is for Bank of America if they decide to do something like this.
Okay, I've only read a little bit about what you're talking about, so I don't know all of the details as far as what they may or may not be doing with this. I think that when it comes to a bank talking about something like that, no one moves the market or controls the market. Even the Federal Reserve and central banks don't. They're only fundamental influences for a moment. And whenever banks start talking about that kind of a trade, if you will, I would get really worried on whatever they're doing, and I would take the other side.
No kidding.
Seriously. No, seriously, I would take the other side. Absolutely. Because odds are their past performance is pretty much proof in the pudding. When it comes to banks, they're 100% wrong.
No kidding. Interesting insight. Yeah.
100% wrong when it comes to that stuff, without a doubt. That's not how they make their money. That's how they lose money. Always, 100% of the time. So I would definitely take the other side of their trade.
Yeah, it was interesting to me because obviously, we've been going over it when you've come on the show as well. So seeing that, I was like, okay, this is adding a little bit more fuel in this fire.
Yeah, if you have to sell to the public what you're doing as far as trading, once again, no wishing, no hoping, no praying. You're trying to have extra influence on people and tell them what you're doing. Get out of here. Either that's not what they're really doing, or for sure they're wrong. It's one of the two.
No kidding.
So yeah.
Well, I'm going to look some more into this as well, because I'm just curious of, again, why they want to get in this and what their kind of endpoint is. And then finally, I guess we can talk a little bit, if you want to, just the dollar in general, right? Looking at the DXY, we've moved down a little bit. We were honestly kind of moving sideways in that 105 area. Well, we cracked below 105. We're at 104.76. Kind of thinking, what are you looking at long term? Is this higher level going to be maintained? Are we going to get back to this 105? What are you kind of seeing short term in the dollar?
Well, with the dollar index, we've been trading lower for the past month. Today we made a newer low. We took out the low from a week and a half ago, and I think I'd be very careful. We're looking for support. I think 103 is probably the bottom of it.
Right on.
And then we'll see a bounce.
Teddy, thank you so much for coming on with us. Again, we're going to work on something, getting a webinar out for you folks. If you want to see this interview again, you can check it out on our YouTube. Like and subscribe. Teddy, thank you so much. Have a great rest of your day.
Take care.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Sheep filling in for Tommy O'Brien. We were just with Teddy Keckstadt. Now, Teddy, again, publishes the Tiger Forex Report through TFNN. This every Monday. Strongly recommend it. Again, all first-time subscribers, just with everything else. If for whatever reason it's not meshing with you, you just try this out. You have a 30-day money-back guarantee. That is guaranteed. Check it out, seriously. And then, of course, the webinars as well are highly educational. So let's take a look right now. We have NYCB shares Rose is $5 billion loan sale to JP Morgan bolstered the liquidity. This is warehouse loans, quite interesting. Such loans accounted for 6% or $5.2 billion of Bancorp's total $82.3 billion as of March 31st. Arguably one of the more profitable businesses. The path to respectable return on tangible equity will continue to be difficult. That is a rough thing when you're selling good lines. I've seen that happen with smaller businesses, and it's kind of a rough situation. Regardless, it was up 3% pre-market, and now we're down 1.28% on some impressive liquidity. Obviously, a pretty wide body on this candle anyways, but what I would kind of assume is this is people who are probably just trying to get the heck out of the stock. Obviously, this has been a pretty beleaguered equity, really beleaguered entity for a while. I mean, check that, right? That was at the beginning of this year, up from around, 1042, and we just crashed down. The low of that day probably being about 554, and just a continued decrease as well. So it remains to be seen how much longer these guys can shake it out. Obviously, major tariffs were placed the other day as well by the current administration. This is going to protect mainly electric vehicles. And check this out, with duties in that area set to quadruple in 2024 from 25% to 100%. So this is yesterday. It said they'll raise duties on $18 billion in Chinese imports. Pretty nuts. Is this going to cause a new trade war? Probably. China's definitely going to respond to some capacity. I think Yellen is anticipating that as well, as she had said something similar to that. Folks, thank you so much for joining me today. We have Basil up next, and we got Steve Rhodes at 11 Eastern Time, Larry Pesavento at 1 p.m. Eastern Time, and then our man Tom O'Brien is back. You don't want to miss that. Have a great rest of your day.